Fantastic. Love to welcome everybody back to the Independent Investor Channel live stream. This is going to be a jam-packed 60 minutes here, special episode. I have my good friend 𝑪𝑎𝑐𝐈𝐖𝐊 is going to come on. He's going to talk about investing from his perspective. He's a friend of the channel. He's been a guest on the channel. You're going to want to stick around because, like 𝑪𝑎𝑐𝐈𝐿, myself, we don't invest like everybody else. Okay. It's very, very important for you to carve out your own place in this market. And to be quite honest with you guys, I've been saying this now for months. The market has shown a little bit of volatility. I for one, look at this as a choppy market. 𝑪𝑎𝑐𝐈𝐿 came out with a video today talking about, YouTubers quitting and wanting to throw in the towel. I spend most of my day thinking about other things like advancing in my job, how I'm going to pay off my truck, how I'm going to affix this looming move that I have up to New York City, which I'm very excited about, all of it. And I seemingly find it interesting as well how social media, to a big degree, and also big media, takes this and spins it with propaganda. It's as if they keep this stuff in the closet until it's convenient to take this stuff out and just spin it so people can just lose their effing mind. I just don't understand it, guys. Look, if it's going to be one of those things that affects your health and it's stuff that keeps you up at night, and do one of two things: quit investing, and this would be what I would wish for you. I think that would be extremely unfortunate because financial markets can be a great arena to build wealth in over the long term. It's very, very simple. And when I bring 𝑪𝑎𝑐𝐈𝐿 on here in about 10 minutes, he's going to share a very unique perspective with you. And it's going to be incumbent upon you guys to sit back, open your mind a little bit, and listen to a differing perspective, because 𝑪𝑎𝑐𝐈𝐿 came out with a video today. I watched it. We were just talking backstage. I laughed my ass off because I find it interesting how when everything is okay and the groupthink is rampant and everybody is jumping on the same bandwagon, everybody feels okay. It's like the herd mentality, right? You guys know the intro that I have with the sheep, and that is not what we're looking to carve out here for ourselves. We are not looking to be called upon with the masses in our application, okay? And 𝑪𝑎𝑐𝐈𝐿 has a very niche approach, that of which I respect wholeheartedly. And I engage in a certain element of the small cap, the micro cap type of growth names that he's going to speak about to a certain extent. I also holistically dividend growth invest the market. I do passively invest the market. So to each his own with regard to their application. And when myself and 𝑪𝑎𝑐𝐈𝐿 get on here to do our cross dialogue, you're going to want to pay attention to the differing styles, but also read below the surface on how deliberate we are with our approach. If you think that I'm unhinged, I would invite you to shut the channel off right now. If you think for a second in watching 𝑪𝑎𝑐𝐈𝐿 and watching his demeanor that you think for some reason he's also unhinged, please go somewhere else and find something else that is going to calm you down with regard to your stock market application, because I'm here to tell you guys it is not worth it. All right. Now, I look back in reflection and I've went through volatility in the markets. And again, from my perspective, I'm looking at choppy markets here, and they've been going on for me for about 7 months. So I'm not really sure how this exacerbated, like I'm stressed out all the time and people are just losing their wad. I know the source of it, and we're going to talk about that a little bit. A lot of people became conveniently over-levered to the market. They sure did. They sure did. And now they're looking for answers. And unfortunately, I'm going to give you a little bit of dose of reality. Okay. In stock market investing, you don't get to blame me. You don't get to blame any of the talking heads on YouTube. You don't get to blame social media or the geopolitical tension that is going on for people a whole hell of a lot less fortunate than you are. The only one that you need to review and reflection is yourself. And this doesn't need to be, I throw in the towel, never to invest again. But here's the thing, guys. If you've been involved with financial markets for, I don't know, maybe more than a decade, you'll understand that the learnings that you've gone through previously in dealing with stock market volatility, dealing with increased or inflated real estate prices, dealing with higher inflation environments. And this is nothing, guys, when we're talking about higher inflation rates and we're talking about the cost of goods going up, et cetera, et cetera. What are some of those defensive strategies that you can deploy to make this make sense for you? And really, in a nutshell, it's to keep it in perspective. And I think what Mariusz was speaking about on his video earlier, I think hit it on the head. And I think a lot of these people really should feel terrible for leading people so astray in an application that, you know, the stock market is not hype. It is big business, and it is serious business. And there is a carve out for each and every investor. There really is. This is what I come on and I foot stomp every single week for you guys. There's a carve out to each and every investor. For those investors out there that just want to carve out a piece to their 401k or contribute to a 403 or a 457, start on a path to wealth building beyond just saving your way to wealth. Because I've got some people in my group that they were so scared of investing that they just saved their way to sizable wealth. And I think the idea of segueing some of that wealth into putting some of that capital to risk in financial markets allows you to outpace what it is that the banks are going to pay you via interest rate. And I think over the long term, that's really when it comes to fruition with regard to the benefits of long term investing. Here's the thing. I responded to my Viper group today, and it was amazing to me how everybody's trying to define the stock market right now. And it gets so disgusting that people look at what's going on in the market from day to day, from hour to hour, from minute to minute, from second to second. And they're trying to look at the market in the acute. And they're trying to size up who's winning in the acute, who's losing in the acute. Everybody's losing. Everything's going to hell in a handbasket right now. And the irony in that is all of that effort is futile. All of it. It is all futile. Spread out over a long enough continuum, and it doesn't take very long to spread those injects a long time. And Peter Lynch talks about this all the time. We've had now over 50 corrections in the history of the stock market, all of which have proved to be buying opportunities. I look at the last 6-7 months as being volatility kicking up in the market for good reason. I really do. This is what stock market investing can deliver. Okay. Now, if you were over levered in the market, these are the times to sit back and say, maybe I need to readdress and look at my plan. These are times where I need to look at, gosh, it would sure be nice to have some cash. I've had cash all the way through the last 6-7 months. Have I demonstrated the ample patience enough to say, you know what? I look at this market and I see all-time highs, guys. I certainly do not relate with an environment where everybody needs to start to take that well-laid plan and start to pull certain bricks out of the bottom of the foundation only to allow it to crumble when all we really need to do is just look, if it's your thing to acknowledge and you think that right now financial markets are going to hell and you don't like the insecurity or the feeling behind that, embrace that, okay? But you come into the Independent Investor channel to get my market pulse that I've had over the course of my entire life. And me right here with the market at 34,000, March of 2020 marked the pandemic low. The market was 18,400 on the Dow Jones Industrial Average. In 2 short years, the market doubled. It doubled to 36,000 on the Dow. It just ripped higher. It was oversold and it ripped higher. And it was during that time frame where a lot of people came out and said, no matter what you buy, no matter how you buy it, no matter if it fits into a plan or not, you're going to make money. And a lot of people caught that wave and a lot of people profited from it. But here's the thing. people get conveniently naive to the downside of financial markets. And I really think that that's something that we holistically need to bring back, have a perspective about this thing. It's never as good and it's never really as bad as you think that it is. But I'm not sure I can buy into this rhetoric that things are it's super bad. Okay. I, I I profited on the way up. I took some of the house money. I positioned my wealth the way I wanted it positioned. And I haven't made outside probably 5 stock purchases over the last 7 months, and they've been relatively small, but for the most part, the large pieces of stock positions that I built, especially over the last couple of years, have not moved. They have not moved, and I declare those portfolios to you guys. I wanna welcome you guys to the Independent Investor Channel live stream, man. It's super great to see such an awesome gallery. You come in here, have a little bit of fun, make yourself a drink, have a little perspective about this deal, guys. I tell you what, man, if you come in here and you get a little bit of therapy from me, you get a little bit of motivation, you get a little bit of encouragement, you get a little bit of influencing in the right way, then great. We are making positive strides in the right direction. But this is never, ever worth allowing it to consume yourself in your life. Never. Wealth building is a privilege. Wealth building is a privilege. It is absolutely not a right. Guys, be back with you in just a second. I take this kind opportunity and welcome Mariusz to the channel here. He leads up Microcap Explosions, and he is a corner of YouTube that I have the highest level of respect for. Mariusz is not influenced by anyone, and really want to encourage everybody, if you have not kicked over and supported Mariusz's message, I would invite you to do so now. Mariusz, the floor is yours. Please introduce yourself and let the group know what you think of financial markets, a little bit about yourself for those who are unfamiliar with your work, please.
Yeah, thanks, Ryan, for having me,
bet.
and thanks for watching my video from today about YouTubers quitting. So you're right. I run Microcap Explosions. I focus on microcap stocks, small stocks, usually market capitalization of less than 100 million. Simply because it's a market there's not much competition, and so I can get good deals if I find the right companies. And so I was sitting the other day and just minding on my own business, and I went to YouTube and I started seeing the bloodbath. In other words, I see one financial YouTuber quits, another one has depression, anxiety, another one is crying, a third one is getting threats from his viewers. They're sending him pictures of his home. We know where you live. And I'm just like, whoa. And then I look at some of these because it doesn't really affect me that much. I'm looking at my stocks. So some of them are like hitting 52-week highs. And then I'm looking at some of the growth stocks, more specifically the stocks that are like, in the Cathie Wood, a style of investing, or Jeremy from Financial Education. And they are just getting absolutely smoked. And so then I'm thinking like, wow, if you look at it like from 2008, people have been spoiled. We had this recession, and then a lot of new people came in, whether they became Twitter influencers or started writing blogs or started hedge funds or whatever it is, and they never experienced a downturn. Like, they had a good time since then. They had maybe a little bit pullbacks and, a little bit more of a pullback in 2020. But overall, over those 12 years, and especially the last 5 years, it was just nonstop party for them. No matter what they did, the stocks just went up no matter what kind of trash they bought. In other words, whether the company was profitable, good margins, no, didn't matter. The stocks were going up, and people like, Jeremy from Financial Education exploded. Meet Kevin exploded. Kathy Wood exploded. And if you were talking about Tesla, crypto, NFTs, growth stocks, I mean, you couldn't go wrong. And now these people are getting absolutely smoked for good reason, because they didn't pay attention to valuations. It's this crowd that says, oh, my company is growing. And I'm like, okay, good for you, but does it mean you should pay an unlimited price for it? I mean, growing is growing. Growing doesn't mean unlimited, right? Every company, whether it's growing or not growing or shrinking, has some kind of value. And if you don't pay any attention to what it is that you're paying for those things, then don't be surprised when you get smoked, because the Fed raises interest rates, takes out the liquidity out of the system, scares you a little bit about the next recession, and guess what? If your stocks are trading at 50 times revenues, 1,000 times net income, assuming they have net income, and this happens, I mean, what do you expect? So now you have this group of people that never experienced a downturn, never experienced a recession, and then took their followers to their slaughterhouse, and now those followers destroyed their lives, right? Their financial lives have been turned upside down, and yeah, they're pointing fingers. Whether they should be pointing fingers or not, that's a different story, because everybody should take their responsibility. But when you're in so much pain, and now you see, especially when I went on margin, I lost everything, or I set my life 10 years back, or now I can't send my kid to school. Yeah, now they're paying the price for it. And if you look at other influencers or other hedge fund managers that maybe had the message of be intelligent, look at those companies fundamentally, nobody wanted to pay attention to this message. But now, and I'm in that group. It looks like you're in that group. Now it's like, okay, we didn't benefit from that explosive growth, but you know what? We're okay.
I guess for me, and this is somewhat cliche. I know maybe people get tired of me hearing this, but as far as YouTube goes, I don't care. I truly don't care. On one of your points, you said that they were entering into stocks at much more overvalued than they. I don't think they cared. You give way more credit for the level of due diligence that was done, which in my assessment was zero. It was all hype. And YouTube allows, Mariusz, for that environment to run rampant. And I think, unfortunately, people, especially with their money, it's an emotional topic. There's a lot of people out there that are genuinely looking for good help, maybe a little bit of motivation to start. And they look at these people blindly with, 1 million, 2 million followers, and they must know what they're talking about. And that is the falsehood. And do I blame the individual? Partially. Do I blame the content creator? Yes, partially. But here's the thing, to their credit, some of them are phenomenal marketers, right? They've become financially successful. Is that success? Right? To your point, some of the lessons about entering into the market, some of the things that you can trade on margin and do it correctly. You can. Okay. It's something that I personally don't do. I have about a $500,000 portfolio and I choose not to. Could I? Yes. Could I buy with cash? Yes. I choose not to trade on margin. But here's the thing. Facebook, for example, great company, taking it on the chin right now. Great earnings, great balance sheet. It's taking it on the chin. There's very few places in the market right now to hide. And I think it has defined a landscape now where people are saying, what gives? What gives, Jeremy? This is what you sold me on the idea that you could just trip and fall into any name in the market and it could go up. And the problem with a lot of that, Mariusz, is that those names did go up. And some of those people made some money. I mean, we're not talking about anything material here. People look at their account and they see that they're up a few $100s and they think that these people are speaking gospel to them. And they don't have the education. You mentioned experience twice in your opening remarks. Experience is key in understanding that you'll never have the market licked. Okay? The second that you think that, it is going to come up and it's going to bite you, and it's going to bite you quick. And the problem is not a lot of people can buy into that. And I'm the first one to say, you don't know it all. You would admit to this because you're an experienced investor. I would self-assess. Look, I'm always learning. I'll go to my grave continuing to learn. And people will tune into the message and say, well, Ryan, what gives? Is there hope for us? I don't think the market's that bad. I don't think the market is that bad. I think we've kicked up some volatility for very, very legitimate purposes. And I think for some that aren't actually being talked about right now, the national debt here in the US is still out of control. That's another one of those aces up the propaganda sleeve to be pulled out at their convenience. And the real estate market. I think those two systemic pieces right now are festering below the surface. And right now, with inflation, high energy cost, and obviously the geopolitical pressures on the market are creating that excuse right now to really push that out. And the markets are adjusting accordingly, you know?
Yeah. I mean, right now, uh, I mean, always, you know, I always think of it as my entire lifetime. I am in the business of buying businesses. I am not in the business of buying stocks, and I prefer to buy them when I am getting a good price. And when you have market participants that, you know, are in pain, market participants that listen to the news and all they hear is recession and how bad it's going to get,
Yeah,
it's more likely that I'm going to get good prices on the businesses.
that's
So
right.
I'm happy, but I want to pay attention to what it is that I'm buying. I don't want to just buy anything. I want to buy something decent.
Mariusz, let's talk about that a little bit because you're not a commonplace investor, okay? That's a full compliment to you, my brother. Trust me. You're looking at price disconnect, okay, with your microcap names that you're looking at, businesses that are undiscovered. Let's be real. And I teach upon this. I'm guilty of it. To teach upon those tried and true methods of seeking diversification, because a lot of people don't want to do the due diligence that you do. Your due diligence is second to none. It's absolutely fabulous. But there's certain schools of thought to say that at any given time, you can look at any company, Facebook, Google, and it's pretty much trading at its fair market value. So all of this crazy talk about all of these mega cap growth stocks, even Netflix for crying out loud, that just sold off, ran up super fast, and now it's coming back out of the stratosphere, and people want to lose their effing mind. It's crazy. But the
Well,
game that you play is a little bit
yeah,
different in your microcap
yeah.
application. So,
But you know, from what you're saying is like, look, the markets are a weighing machine in the long term and a popularity contest in the short term, right?
that's
That's
right.
what we learned from Ben Graham. That's what we
Well
learned from
said.
Warren Buffett. And
Yep.
I'm absolutely with you because there's companies out there like Netflix or PayPal. Uh, I mean, I like those businesses,
Sure.
but you know, even a good business is not a good investment
Mm.
if it's overpriced. And both of these companies were stratospherically overpriced, and
Oh, yeah.
now they are coming down to earth. And you're right, people are losing their mind. Uh, and you know, to the point of Netflix, for example, and it's a very good example of a growth stock because
Mm.
it's been a growth stock for so long, and people like to say, "Oh, it's a growth stock or it's a value stock." Um, I just hate this distinction because growth is a variable in value. There's no difference between growth and value.
No,
Just
sir.
when something grows faster, it's more valuable. But you can't just say one is value and one is growth. So something like Netflix, okay, it's been growing, and people said, "Oh, it's growing. We have pandemic. Everybody's going to be signing up for Netflix." 2 weeks later, they said, "It's pandemic. We're going to be signing up for Netflix." 3 weeks later, "It's pandemic. We're going to be signing up for Netflix." Okay, how many times are you going to tell me this? It's like buying a house. Okay. Oh, this house is worth $100,000, but it has a pool. Okay, I'll give you 110. But did I tell you it has a pool? Yes, you already did. Do you want me to add a $10,000 to the value of the house just because you're going to tell me 50 times that it has a pool? No,
Good job.
but that's what people do with growth stocks. Okay, it's growing. Good. Okay, it's growing. And then they keep putting more and more higher price on
Multiple.
it up to a point that it's like, it's ridiculous now. And then all that happened now, and it started with the first quarter, that the growth slowed down. Okay. And then Netflix gets destroyed in the first quarter. And now the growth went negative, and then the stock is in free fall. And that's all it took. That's all it took. So when you're buying these stocks and you're paying any price for it just because somebody said it's growing, well, all it needs to do is just sneeze,
Hiccup.
and the stock is going to go down 50% because it's overvalued. That's it.
That's it. Yep. And this isn't the first example. History has provided many, many examples of this very, very same exercise. And it's if we have such a short memory that we never learn, we being retail investors. I don't understand this habitual thing. I just don't get it. And investors could do themselves a huge favor by breaking away from that. They really, really could.
And another stock that I don't know where you stand here, but another stock that needs to be Netflixed is Tesla. It needs to be Netflixed because
100%.
It's like, I like the car. I drove the car. Okay, I like the toy. Elon Musk built something incredible that's never been done, but it's not worth $1 trillion. Okay,
it's 210 times forward earnings. I was thinking about buying some on Monday, 𝑪𝑢𝑠𝑡𝑉𝑢𝑚. I don't know. 210 times right now is what it's trading at.
Yeah. So it's like, I understand it's growing. I understand you like it. Growing doesn't mean it's unlimited. So I mean, I'm just watching it and I'm like, that's the next one that's going to smoke a lot of people. And Cathie Wood, that's her last thing. It's Tesla. Everything else went to the slaughterhouse. Like, Tesla is next, and then all these influencers, all these YouTubers that are praying to Elon Musk like he's second Jesus. Good luck to you, because you need a lot of luck. All I can say.
I'll open the floor to you, 𝑪𝑢𝑠𝑡𝑉𝑢𝑚. Is there anything that you would like to disclose to the audience with regard to companies that you're looking at right now? I'll open that up, and if you don't want to discuss that, no problem. But I think you have a couple names in mind, if not one specific, if you feel comfortable with sharing it with the audience.
Yeah, sure. So the one that's interesting to me, most specifically because it's hitting 52-week highs, is Voxtur, VOXTUR, a ticker symbol V like Victor, XTR, which is the Canadian symbol, and VXTRF, F like Frank is the last letter. It's on OTC. And I find this company very fascinating because this company is in a real estate space that is improving the appraisal and the title to make appraisers faster. And then they just had a monumental shift in the title space. And so before I get into this, I made a video on Twitter today. It was like a 1-minute video where I featured 6 companies. One was Voxtur, and the other one was Opendoor, Redfin, Real Matters, Doma, and Zillow, which are all kind of like in the real estate technology space. And I went through the chart of every single one, and it was like Redfin down 86% from the peak. Opendoor down 80% from the peak. Doma 81 from the peak down. and Zillow down 80%. And then I pulled up the chart for Voxter, and it's a 10x over a similar period of time. 10x over the last less than 2 years. And I finished the video saying, figure out why. Why is Voxter 10x in the real estate space while everybody else is getting destroyed? So one thing is that everybody was talking about the other names because they are in the space, in the NASDAQ space. Everybody's talking about it. Meet Kevin. Any YouTuber, any influencer was talking about these names. Nobody was talking about Voxter. But more importantly, what happened with Voxter is that they had a change. On April 6th, Fannie Mae made a tectonic change in the title insurance space. Title insurance did not change for 75 years. And 3 years ago, Voxter approached the Fannie Mae and the regulators and said, title insurance is a scam. Title insurance is too expensive. Because regular insurance companies, when they collect premiums on anything, auto or health, when they collect premiums, they pay out about 80% of their premiums in claims. In title insurance is a one-time payment. The claims are like 3%. So in other words, title companies are stealing money from buyers, whoever is refinancing, like literally stealing money. That's why some very reputable publications even wrote articles on how title insurance is a scam and it adds an extra cost to the real estate transactions. So Voxter 3 years ago approached the regulators and said, we have a solution. We have a different product called attorney opinion letter that can be used as an alternative to title insurance. And instead of it costing $1,500 or $5,000 if it's like 1% of the purchase price on the title insurance, we can deliver attorney opinion letter for $500. And so it took about 3 years, but Voxter successfully demonstrated that they can do it. And Fannie Mae approved attorney opinion letter as an alternative to title insurance on April 6th. At first, when this came out, the market didn't get it. And then when the press release came out from Voxter about this, the stock almost went up 70% within 3 days. And now, of course, it pulled back because everybody is freaked out about the world. But still, it's up a lot. And this is a tectonic shift because people still don't understand how huge this is, because Voxter has a patent on attorney opinion letter combined with the data, and they are the only game in town during a time where literally they disrupted the industry. And now you have to ask yourself, who's gonna use title insurance if they have a choice, $500 for attorney opinion letter or $2,000 for title insurance? They're going to steal so much market share from the title insurance business that the title companies are now panicking because this is going to disrupt their entire business. And nobody in real estate is paying attention. When I'm emailing brokers, mortgage brokers, and I said, do you know what just happened with Fannie Mae on April 6th? They have no idea, because Fannie Mae reported a guidelines change, and it was a 1,000-page document. Title insurance was just on page 902.
Yeah.
So nobody's going to read this. But the monumental news that this is for Voxter, this is between, like, Voxter can go up 20 to 50 times based just on that news, and barely anybody is paying attention. So,
is there a fiduciary type of responsibility on behalf of the brokers to disclose that to potential buyers? Or do you anticipate that this is going to take awareness and outreach to educate on the buyer side? Because brokers are going to play hardball, right? They're not going to share this in any of the documentation. They're going to keep the status quo as long as they can, right?
Well, it's first getting rolled out to 4 states. 4 states first. Mm-hmm. And so Voxter already has lenders that are lined up that want to do business. So I'm not sure how much the mortgage brokers can do. And if you think about it from the point of view of a lender, you see interest rates are going up. Mortgage rates are going up. Yep. When interest rates were low, and mortgage rates were low, every lender was swamped with transactions.
That's right.
They didn't have to work very hard to get transactions. Now, when interest rates go up and mortgage rates go up, the transactions slow down. So
Yeah.
now they're going to actually have to get competitive. They're going to try to steal market share or transactions from one another. And the lenders that are going to have something that differentiates them or offers lower closing costs are going to be the one they're going to win the business. Because if you say, if you have a $200,000
right.
house, 5% rate, and one lender has 5,000 closing costs, the other lender has 2,000 closing costs, who's going to win?
That's
So
right.
this is an absolute amazing opportunity for something like Voxter for exactly this reason, because some people are like, well, how is Voxter going to perform in such a bad real estate market? If Voxter already was had a big market share in that space, that would be a problem, because the lowering of transactions would lower everybody. But in such an environment where they're going to have to fight for business, this is the best scenario you can ask for.
God, that's incredible. I really appreciate you sharing that. I knew you wanted to. I know you're a big advocate of Voxter, and something that's always struck me and stood out with you and your approach to investing. The stock has 10x'd. Are you looking to sell on Monday?
Absolutely
Talk a
not,
little.
because there's
Talk a
another
little.
10x left.
That so it speaks to people's short-term application, right, in the market and how you approach financial markets. You're not taking these positions in these companies for 6-month returns. You're looking at multi-year application and looking at these businesses when they're a seed and seeing that seed turn into what it is that you feel like it could potentially grow into. So my question to you is, where do you think Voxter goes into the future? What drives your conviction into the future as to what the, I mean, you can throw out and say it's, well, it's going to 10x, it's going to 50x. Where do you see their niche in this? Because you're right, it is getting attention. It's holding above $1. It's rolled off just a touch, but it's still holding that dollar mark. Mind you, this stock started at, I think, at around 8 cents. And I don't know where your entry, I won't even ask you, but to the home gamer, I mean, that's a 10x at this point. But to your point, this is just the beginning in the stock.
Yeah,
So what do you see
absolutely.
for?
Absolutely. This is a beginning. And Voxter has more than one division. So that attorney opinion letter is just one division. They have a
I see.
foreclosure division that helps banks process foreclosures. I think it's pretty clear where the foreclosures are going now.
Mm,
Then they have the appraisal
100%.
division, where it helps banks and helps appraisers be faster. Then they have a division of tax assessment, where they help municipalities put proper
Mm.
taxes on it. And then
Oh,
they're
man.
rolling out another business where Voxter Wealth, where they will help homeowners and banks figure out whether the taxes on their homes are correct, and if they're not, by how much. So these other divisions are very valuable too. But if I just focus on the attorney opinion letter, and there is about 1.5 million transactions per month on the purchase and refinancing. So now that interest rates are going to go up, let's say that
Mhm.
number is going to go to 1 million. Well, and then I can make certain projections. If I think that Voxter can capture 10% of this market share, in other words, 100,000 transactions per month, which I think is very reasonable considering this is a game-changing application. So if I do 100,000 and they will do about $200 per transaction, uh, that's almost $250 million of
In earnings.
profit, not
Yeah.
revenue,
That's
of
bottom line
profit. So then
profit.
I'm
Yep.
like, okay, how much is 250 million worth? I would say that's worth about $5 billion.
Yeah.
Today, the company's market cap is about 700 million. So just on that, I'm like, wow, it's almost a 10x just on that. And I'm not even including the other business units,
Mm.
which are also huge business units. So I don't think you see it. I looked through about 6,000 companies one by one in order to find this one. I went through every single company on NASDAQ, New York Stock Exchange, Canadian Stock Exchange, OTC, and TSX Venture, one by one. And I found this company. And I would have never found it if I didn't go through every single company one by one, because it doesn't screen well. The revenues or the profits weren't showing. You had to find it. You had to understand it. And I used to be in the real estate space. I used to be an appraiser and a broker. So I understood, but I had to make the phone call. I had to do the research to understand what it is that they're developing, what kind of strengths that they have. So if I say that it took me 6,000 companies to look through this, there's something special here. And you don't find those kinds of opportunities very often. And when you see something like this, in my opinion, I just have to grab it.
I think that's what separates you. I have the utmost respect for your due diligence that you do. You're providing a service really in a landscape where not a lot of people even will dwell in your wheelhouse, Mariusz. There's no doubt about it. And I really appreciate you coming on and sharing your comments with us tonight, man. If it's okay with you, you can stay on, but I'll leave you the last word. And if you guys are interested, please take this opportunity. There's a bunch of people who catch this from an international perspective after the Friday live stream. Please kick over and support Mariusz, because I tell you what, our message, and I know Mariusz, man, he doesn't mean to impugn the work of other content creators and all that stuff. That's not the point here, okay? The point is to provide a different perspective, and it's up to you to delineate what it is it's going to be important to you, okay? And from my perspective, it's super important to accept all opinions and approaches. That way it can expand your own personal application. So I'll leave you the last word, Mariusz, please. And we'll segue. We've got about 19 minutes left in the live stream, and I'll address my group here and try to talk them off of this crazy market that we're dealing with here anyway.
Yeah, well, so once again, thanks for having me. I would say that if you feel scared in this market, you're probably feeling the right thing, okay? And it's those times that separate the best from the rest when it comes to investing. And usually it's those kinds of times when you are uncomfortable, when you can plant a seed for the future success. Think of it as a down payment. The pain that you're feeling right now, think of it as a down payment for future success. The bigger the pain, the bigger the down payment. So good luck to you guys. Think of investing good stuff. Think of it from the point of view of businesses. Invest in good businesses, great businesses, because why not? If the market is offering everything on sale, choose good, and avoid the trash and avoid the things that are popular. And if you want to follow my work, maybe Ryan can leave the link to my YouTube channel in the description, or you can take the impossible to pronounce first and last name of mine and then just type it into YouTube, and then you'll find me. And I have a playlist for Voxter, and you can get exposed to other message that I have on my YouTube channel.
Absolutely. And providing high value content as well, Mariusz. Thank you so much for your time and sharing your insights with the group tonight. Really appreciated it.
Thank you for having me.
Thanks, Mariusz. Be well, my friend. It's a special treat to have Mariusz on. I just think it speaks to my insistence in people understanding that investing needs to be individual. Okay. If you feel like yourself is getting caught up in the hype, and this goes for the sky is falling approach now. If you find yourself getting caught up on this, and I know perhaps maybe I come on and you're like, man, Ryan doesn't seem he seems unfazed by what's going on right now. Mariusz kind of hit it on the head when he said, look, if you're feeling a little bit like crazy, you wake up every single day. I mean, my portfolio, it swings radically from week to week and from day to day. It's totally fine. It's not one of those things that I'm going to react to in the acute. And it's something that when you look at it and say, well, here we go, here's another down day. I know Everclear boy was in the group here. It's so funny, man. I love this guy, man. It's so cool. He was making a reference to It's a Wonderful Life when they do the bank run, and he's got the few dollars or $1 left when they shut the door really quick, and whew, we made it through another week. There's no emotion in investing, and now I look at my portfolio twofold. I look at it like it's gone to war over the last 6 to 7 months. It's incurred some volatility, but am I really in that worse of a position now than I was a year ago? If you look at it from the dollars and cents perspective, you would say yes. Okay. But if you look at it from like what Mariusz talked about, I can really relate with this idea of every little dollar that you can invest while the market is selling off is just that seed that can provide that payoff down the line. And it comes back to asking yourself why you invest. Why are you doing this? Are you looking to wake up every single day and have validation in the market every single day, that your portfolio can go up every single day? And this is some of the theme that we wanted to touch on tonight, is that some of these YouTubers, man, they feed off of that because the stock market can deliver that. It's very, very powerful to the upside. And it's also equally as powerful to the downside, sometimes even more exacerbated. And that's what really gets to people, is the rate of acceleration to the downside. And that, gosh, it took me months and maybe even years to build up to something. And now, just in a matter of months, boom, it's all sold off. And here I am crawling back to the independent investor to try to get some sort of motivation, some sort of clarity as to what it is that I do and why I do what I do. Guys, remember this about being part of the independent investor community. You don't even need to call it that. I do, because this is words of advice that I live by in my application. Are you protecting your wealth against tax? The answer is yes. If you're doing this message correctly, the answer is yes. Number two, are you wealth preserved in your application? In other words, you look at it in the acute and it's bad, but you look at it over any time frame, and the longer you have, the more validation that you end up having in understanding that you're wealth preserved. And this is the core nucleus of the independent investor channel. I do not shy away from this in identifying that the elimination of fees over the long term is the key in this application, is the absolute key. Somebody invests their entire life and they do not catch my message, you run the risk of falling victim to subjecting your money to fees that can consume your money over time, costing you hundreds of thousands of dollars. That's the very important element of investing that you want to preserve. Stop getting caught up because your YouTuber seemingly went left and you went right. Stop blaming the YouTuber out there because they're seemingly not providing you answers in a down market that doesn't have any answers to yield. Right? Stop blaming other people for the decisions that you make. Right? This can be a lot easier in your application when you look at the independent investor community and you're proud of the fact that you're diversified, buffered to the downside. It's a defensive strategy that I believe. I look at my ETFs here, guys. I'm up 15% in the VPU. It's the utilities ETF, which is a sign to me that people are flocking to safety. It's fine. No problem. But I'm up. I'm up in a down market. Now, the market's poor right now. There's not a lot of places to hide. I look at the portfolio and there's some soft spots in there, but I'm still making dividends almost every other day. These are pieces of the portfolio that I want to own. It's a defensive strategy that pays dividends, no pun intended, during times of volatility, such as these. And it allows for much more of a holistic approach. Okay. Do I continue to fund the market? Absolutely. Continue to dollar cost average the market. And those every dollar that goes to work as the market retracts on us are seeds. They're going to pay dividends down the line. You look at it in the acute and you're like, man, I just funded my account with $50 and it's gone on Monday because we're subject to this never ending down market. you flip the script, okay? It's all mental. It's all mental. And there's not an influencer out there, whether it be social media or big media, that is going to fluff you on the butt and say, everything's okay. All you have to do is hold for the long term. No, propaganda is not sold that way. Okay. And I've gone so far as to just shut that off. Guys, think about some of the things. Think about where your influences are coming from. I would hate to say that I'm so influential on you to render results in your life that would result in something negative. I saw one of the comments come through. 𝗖𝐊 has ruined me financially. It hasn't ruined me financially. I've probably lost more than 𝗖𝐊 than most people have in their portfolio. Mm, That's a hell of a statement. And I'm still grinning. I'm still focused on those things that I've, over the last month, have celebrated. And I'm celebrating tonight. Contrary to the title of this video, do I think that the world is going to hell? No, I don't. I don't think like that. I don't operate like that. And I don't live my life that way. I don't. Is 𝗖𝐊 trading at a 52-week low? Yeah. Have I ever traded in any other name that's been trading at a 52-week low? Many, many times. Many, many times. And it just so happens that looking at it in the acute is not in your best interest. And this is not something, you got the angry emoji. All right. You can be angry at the stock, be angry at the company, angry at the CEO. It doesn't change a thing in the acute. The only question is, if you're going to be around 1 year from now, if you're going to be around 5 years from now, where's the company going to be then? That is the only fair question. If you're going to evaluate the company in all fairness, look at the progress that's been made historically, okay, and come up with a present thesis now. Do not use the stock price as your thesis for coming to substantiation on whether or not you take a position in a stock or not. It's futile. It just doesn't mean anything. Just like looking at the stock market in the short term just doesn't mean anything. Okay, what are you going to do? You entered into a position, what, to justify selling out of that position prematurely, of the market turning around, the geopolitical situation dissolving away, which they always do, the stock market recovering, real estate stabilizing, interest rates stabilizing, the tit for tat, right? People come out of this post-pandemic environment and they want to get busy. United States is still the best place for financial markets, bar none, hands down. There wouldn't be the bulk of my money in financial markets any other place than the United States of America. It's just that simple. We're lucky to get to participate in these markets. It is just that simple. And keeping a perspective on your opportunity is key. Do not lose track over that. Okay. Keeping cash aside. This is something that I talk about all the time. I can't tell you how many times the common theme of the comment comes through social media. I wish I had more cash. I wish I had more cash. I wish I had more cash right now. You don't have any cash right now because when the market was going up, you failed to identify the potential on the back end for the market to potentially roll off. I still have that cash because I've yet to see the roll off, to be honest with you. And I'm taking a double downer with some of the growth names that I own in my portfolio. Some of the dividend paying stocks that I have are slowly rolling off here. Okay. And certainly some of the hyper growth and micro cap stocks that I own have certainly taken it on the chin. I'm down fairly handily on some of that stuff. Right. Does it drive my decision making? It doesn't even register on my list. What registers on my list is that the help that we can render in empowering one investor at a time, that's key, right? When somebody out of the blue provides me a Yeti with my name on it for a thank you, for, by her admission, maybe potentially taking a step in the right direction in changing somebody's life. You think I really care about the day-to-day ups and downs of a portfolio that's come back a little bit from, you know, 470 to 456. It just doesn't equate with me. This is why I talk about the hierarchy the way that I do. I this month came one truck payment away from owning a truck that I paid around 34,000 for. It was the most I've ever paid for a vehicle. I took my trade in, I traded it in, I bought it 3 short years ago. I owe $8,000 on that vehicle. So over the last 3 years, I've paid that vehicle down to 8,000. So you look at that investment that is so socially acceptable in society, in taking $34,000 and putting it onto a vehicle in the transportation section, and society would say, wow, that's incredible. Look at that truck that this guy drives. In my perspective, I'll be happy when the damn thing's paid off. You know, it's a depreciating asset. I have lost money on that $34,000 that I've paid to the bottom line and received no return on value in my investment other than the enjoyment that I get from driving from point A to point B. But we look at our stock portfolios and it's come back a few $1,000, or in a lot of cases, 10 or 20 or 25, or even some cases much more than that. And we somehow cannot look at it with the prism or the lens that is applicable to stock market application, because we want to apply the same perspective in everything that we do, stock market included. And that is the one area where you just do not have the luxury of doing that. You don't. They say, what do we do in this market? Okay. Buy the market, okay, in chunks. If there's certain names that you've seen here, you're probably getting a discounted price on some of those names. Look to strategically buy the market. Doesn't mean that you have to fall on tilt and go crazy buying the market. Increase your funding a little bit to the 403B. You can do that. Increasing that by a few basis points can be that very seed that you plant now that can render tens of thousands of dollars of capital appreciation into your future, just by making that strategic decision now to increase that a few percentage points higher, because you have that surplus capital in your budget to do so. So continue to fund the market. Take stock of what works or what has worked. Most importantly, a lot of people will look to sell their winners right now just to preserve capital. It's one of the worst things you can do. Take stock of some of those things, some of those positions that you've taken over the previous couple months, and ask yourself, have they been good investments? In other words, did you get caught up in the hype a little bit? I'm going through that deliberation myself, and I can sit across from the social media audience and say with all honesty, yes, I believe that I have. And Hyliion is not part of that. It's not. I look at that investment every step of the way, every single inject that I've taken, every dollar that I've spent on shares owned in Hyliion. That's one of my best investments right now, and it just so happens to be trading at a 52-week low right now, right? But some of the ill-timed buys that I took, some of the ill-timed entry in some of the hyper growth stuff, coming off of the SPAC debacle, entering into some of those, which are great companies. SoFi has just taken it on the chin. Matterport, taken it on the chin. Palantir, in industries that I want to be in, and I'll still continue to own them, and I'll win over the long term. But was there a lack of discipline and patience on those? Certainly. Do I beat myself up over it? No. Do I fall on tilt and sell the companies? I don't do that either. It's just I critically evaluate and look at the companies that I bought and say, I'll learn myself up for next time, and I'll be a little bit more wiser the next time, and maybe taking a little bit of a patient pause as opposed to maybe a hype buy on what I consider to be a very nice dip in the stock, and the stock maybe potentially continued to dip. What not to do? What not to do is to panic. Okay, remember the plan that you bought into. Remember why it is that you're investing. Do not make short-term decisions at the expense of your long-term gains. Do not do that unless they're to the positive. Investing now, invest more. You'll never go wrong doing that. I highly encourage you guys to look at the opportunity to do all that stuff. He says we're doomed. Get ready for a big war. You could be right. Could be right. And I look at each of those two in a box. Will it affect the stock market? Perhaps. I'm willing to take my portfolio wherever it is that it's going to go over the next 20 years. It's just that simple. And nothing will deter me from my conviction. Nothing. It's just that simple. But yeah, you could be right. You could be wrong. I heard some definitive talk in my Viper group today about this and that happening in the stock market. And it's usually about the times where people have started to lose their minds and start to forecast doom and gloom, when the market will do a funny thing and it'll turn on us, and it'll go up and it'll do something that you haven't expected it to do. Hyliion did go up today. I circled it, actually. I tweeted that and I said, let's go ahead and celebrate a little bit. But anyway, got some comments here. Actually, there's a heck of a gallery, and I appreciate the support here tonight. This was really awesome. Let me scroll through here. Everclear says he's new to Voxter. Check it out. That's really cool. 𝑪𝑢𝑠𝑡𝑜𝑚, he runs a tight ship, and to get part of his group, I'm one of those folks that are absolutely leery of the hundreds of groups that you can join on YouTube. I have one. It's a very, very low cost group, but 𝑪𝑢𝑠𝑡𝑜𝑚 runs his group, and he runs it. You get access to his unique perspective on the market. So we're in debt to him for coming and sharing his perspective. I will do him a favor and share his link in the description below as well, just as a thank you for spending his time with us. Hit the thumbs up for us, guys. Really appreciate the support. It's been an awesome week here. I will be transitioning back up to New York here in about into June. Some of you guys are curious about that. I'm going to try to keep the delay to the Independent Investor channel as little as I can. The project's not going anywhere, just like I'm not going anywhere, and I expect you to take the same philosophy. It's just that simple. Investing is a lifelong activity. If you truly, truly buy into that philosophy, then why are we looking at it that we made it another week? Why are we looking at it in that perspective? It just I learn up those perspectives. I do. I'm always intrigued by listening to different people's perspectives on financial markets, and it's always of interest to me to understand, different schools of thought in the market. I mentioned nobody's right or wrong, but I think it makes us stronger as a community. It's all your fault, in my opinion. I blame you for my understanding of diversity and dividends. Warren Buffett's got his perspective on it for sure, but he's got the convenience for sure, and I think that's something that a lot of the YouTubers miss, and it's something that frustrates me, is that they've got all the power in their hands to really, really help people, and I think because they're not willing to do that, and I think they're incapable of seeing that big picture. I really do. I really think they have more of a closed mind of building their message up to all extent, and that's what they care about. And YouTube allows for that to happen. So you really can't blame those content creators for leveraging the power of YouTube to build up a powerhouse of a YouTube channel. It's just that simple. I just wouldn't take it that way, and who's to say my way is perceived somewhat boring. But over the long term, I think what you guys may judge in the acute for a small YouTube channel like mine with 30,000 subscribers will become very, very apparent over the long term. Guys, I really appreciate you tuning into the message tonight, man. Bid you all the best over the weekend here. We will be back next Friday on the Independent Investor channel. Another final thank you to 𝑪𝑢𝑠𝑡𝑜𝑚. Kick over to his channel. Very, very good to support his message, man. Appreciate his time. Guys, thank you so much to helping foot stomp this message and mission in empowering one investor at a time. I believe we're doing that. And as long as I feel like we're doing that, we will continue to foot stomp this message into the future as we grow wealth together on this financial path and journey together toward financial security into our future. Guys, take it easy. We'll see you next Friday. The Independent Investor Channel live stream.